Good morning, folks. Cecily, could you hear that music playing? Like in the background? What's up, Vic, man? No? Okay. Let me see what's going on here then. You have it a little too low. What about now? I'm trying to keep it low, low, real low. Morning dish. Trying to keep it really low. You know what I'm saying? So, what's up, Alicia? What's going on, guys? Take a look at this though, right? Let's go to the charts. Let's go to the charts. Daily. Bam. Let's go. Look at where we are this morning. Where we are this morning. What's up, Kenneth? Right, all right. Let me get my agenda flapped open for the day. Um, here we go. So let's um let's start by swinging on over the bar chart real quick this morning. Our our number one supporters, we might call them. Good morning, Anisha. Swinging over the bar chart. Let's go to the futures market. Um, let's start on the let's start with the overview, and then we'll swing back around to some other things there. So we do know that the Dow Jones was down. What was it, 1,600 points when it originally opened this morning, or something of that nature. All right. So it's near the lows. Um, near the lows that we saw in the afternoon yesterday when the market opened. Um, we have uh, we have crude oil here this morning trading just at $60 a barrel. We I think we did hit 59 overnight. That was these are your May contracts for crude oil. Um, notice how your futures are all the way out in June, right? Notice how your futures are in June, right? Um, that's one of the things too that I like about the way that we trade and the way we do things. You know, because it is very similar to how things are handled over here. All right, let's take a look at the commitments of traders real quick. Let's go to these legacy reports. I want to see what's going on the positioning level. All right, let's see here. We could actually we can actually pause the music now. That was just to that was just to get us into where we are now. Let's um let's get to this though. All right. I'm still not seeing any 52-week lows in terms of positioning. right? See right here. So I'm still not seeing any bearish um, points yet. We can go back all the way back to January, right? All the way back to December, and I'm not seeing any extreme bearishness here. All right, so I want you guys to kind of keep that in mind. What's been going on as we've been, as we've been taking these legs lower, more and more legs lower. It seems to me as mid caps have been getting a little more, uh, you know, have been getting a little more bullish actually. Right. Dow futures are back in the positive. Dow futures are back in the positive, and you know, working some out there. So we need to be really mindful of how positioning is working out. Good morning, good morning, good morning, good morning, AC. What's going on, man? Yeah, we need to be very, very observant of how positioning is going. So we were the most bearish, right? If we look back, um, 1, 2, 3, 4, 5, 6 weeks, we were the most bearish March 11th, right? We were the most bearish March 11th. Does seem like we picked up a little more bearishness here on the S&P last week, but again, nowhere near where we were for March 11th. Okay. Um, Now that's for your commercial hedgers. Let's go over to the speculators side of things. All right. Let's go to the speculators. All right. And we can see a similar note going on here. You know, previous period was positive right here. Right. So March 25th, March 18th. So our speculators here, and these are the guys we want to pay attention to more than anything. I was just taking a look at the large hedgers. The speculators are the ones we really want to pay attention to. All right. So we hit some extremes on March 25th, and on March 25th, and on March 18th. For the VIX, we hit like peak bullishness on March 18th. So large speculators have becoming less bullish on the VIX since March 18th. Um, or at least we can say that they've been saying to themselves, we don't want to we don't want to get caught off guard with the risk, and you can see why. You see this? Look at that. Now, why this happened right at our level. Now, I had a request this morning to show you guys how we came up with these levels here, 1, 2, and 3. See these levels? 1, 2, 3. These. What color is this, guys? Is this? We'll just say purple. These purple levels that you see on my chart here, right? But it seems like such a different kind of purple, you know. Anyways, but look how we came right down to this level and we're bouncing here. I can't tell you that this is going to be the bounce of the century or anything like that. Right? I can't tell you that. But what I can say is it just does make sense to be bouncing off of this level. It does make sense to me, right? We mapped out these three levels as likely to be the strongest levels we approach this week. So from a support side, well, no, let me rephrase that. Not the strongest levels of support we'll approach this week or the resistance, but um, based on all the key levels we had in front of us, these were likely to be the strongest out of the bunch. Right? That's what we talked about. The same way you just sliced through this 487 like it was nothing. But when you got around the 484, you kind of slowed down a little bit, right? So you wanna keep that in mind. Now, for those that are maybe joining us for the first time, yes, we are a group of individuals who are not really you know, chasing the market or chasing the bag every 10 seconds. So we're not gonna be jumping in and out of trades every 10 seconds. We do occasionally bring up the potential for trades. And look, I mean, look at this right here. And in that regard, being that I'm speaking on that right now, good morning, Moji. Being that I'm speaking on it right now, if somebody wanted to be in a long position right now, I would not blame them. Okay, I would not blame if you want to be in a long position right now, and I would actually say that reasonable targets would be towards this range right here. I'm going to show you guys another little trick here this morning, right? Watch this. Let me bring this down to the 5 minute chart. Right now, remember the what we're talking about here is what's happening on this 15-minute chart. I wouldn't blame anybody if they want to be in a long position right now. Okay. Um, let's go down to the 5 minute chart, and I'm gonna do something really quickly. Um, I I want to continue. I want to continue to point out to you guys the importance of understanding the importance of understanding what um the importance of understanding what these what the utilization is or how do you utilize Fibonacci's, right? You see these two levels right here, 487.95 and 501.42. Those are two key levels that exist for that exist for the SPY right now, right? Now watch this. Watch what I'm gonna do, right? I'm gonna say, okay, what are all the key levels in between those two levels? All right. What if I want to know that? Because I want let's because I want to day trade it, right? Watch what I do. I'm gonna do this, right? I'm gonna get rid of this real quick. Let's get this out of here. All right. Let's all right. So just for example, right? That's what I'm saying, right? So just for example, right? Look at how we just found support right here. You can see. Look look at that support we found right here at this key level, 491.21. What I keep trying to get you guys to understand, and I'm hoping you guys are getting this. I'm really hoping you guys are getting this, right? Fibonacci's are not some complex tool that's hard and difficult to understand. Plain and simple. This is a tool that is meant to give you, right? To give you the key levels between 2 points. Now, typically we focus on the highs and lows of a specific range. Yes, that is true. But the reason we focus on those key levels from the high and the low is because we want to know the key levels between that high and low. That's it. So, but any two key levels, I want to know where the support and resistance is in between those two levels. I can do that. Does anybody think this is a coincidence that we ended up finding this level right here? That's just look at how on point that level is right there. All right, just think about what I'm saying to you. Here we go. We're approaching this 494. Right, and what I was getting at here is I wouldn't write this off as a key target, right? This 501 right here. If you want to target at 501, I wouldn't write that off, right? But at the same time, so you got this right here. So you're in the golden zone now, right? If you want to put it that way, you're in the golden zone now. Look at how we were finding resistance right here before it all, because this was that original key level here, right? Um, again, I'm just hoping that you guys are really just catching this, and just run with it, man. Just catch it and run. Catch it and run. Okay, that's the proper way to think about the Fibonacci's. That's the proper way to think about it. Let me continue to elaborate. Let me continue to elaborate. And then I'm gonna go with that request I got this morning, by the way. Like I said, I got a request this morning to talk about how we discovered those other key levels in the market. All right. So we're gonna talk about that, right? This 484, this 521. How do we come to those conclusions? All right. So for example, right? Um the the low, the low of Friday, the low of Friday and the open of today. That would be a gap, right? Let's go to the daily chart. This would be a gap, right? This would be a gap. The open of the day, the lows of Friday. The open of the day, the lows of Friday. That'd be a gap, right? So what if I want to trade a closing of the gap? What if that was my intention? I want to trade a closing of the gap. All right? Okay. So again, from a Fibonacci based perspective, where do we open today? Let's see here. We open about here, close the gap here, right? So again, if I was on the 5 minute chart, I'd be able to see it a lot easier. Let's go to the 5 minute chart and look at it. Look how we're finding resistance right now. Look at it. Look at how we're finding resistance right now at that very key level. So these are all the key levels in between today's open and Friday's low, the closing of the gap. Know how to use your tools. Look at that. Look at how we're finding resistance right now. Look at it. Look at it. You can't make that up. You cannot make that up, right? Look at how to break structure here, you got to break this 38.2 here, right? Or maybe this is your stop loss now, right? Maybe every level up, boom, new stop loss, boom, new stop loss, boom. Maybe this is your new stop loss right here, 494.48. Maybe that's it. Look at the support that we found there, right? All right, boom. So maybe right then and there you said, all right, I'm gonna get out the trade. You see, right? And by then, what by then you've already right? You've already hit three levels. By then you've already hit three levels to the upside. You're good. Okay? Like just understanding certain things, guys. Just understanding certain things, you know? Um and hold up, wait, hold on. I think this was the open right here. Either way you just broke the level anyway. 494.27. Didn't change much. Didn't change much, right? But you get the point. You get the point. Now, some prefer a break and close. So let's just say you prefer a break and close. Then you might still be in there right now. Um, and you might be about to catch yourself a break, whatever, But look at how simple I just made that trade. If I want to take that trade, look at how simple I just made it. All right, keeping it simple. And you probably would have took your entry here. So boom, right on this move here, you probably took your entry here. This candle and this candle would have been your win. This candle would have been your stop loss. You're getting out, and I just made it. Just took a simple trade, and I didn't have to really think much about it. I did what I had to do, and I moved out of the way. Right, did what I had to do, and I moved out of the way. All right, man. Wait, hold on. Let me go back to that one real. Look at this. All right, look at that support level right there. Look at that support level right there. Look at that support level right there. Look at that bounce back up. All right. These are like so and if you traded If you traded the Oliver Velez school of thought, then there's been no reason to get out just yet. You wouldn't have used this as a stop loss. Uh, you would have actually waited for the market to actually give you a better signal again out of the market. In which case, you might have actually sacrificed this candle right here, right? From an Oliver Velez perspective, the market has not shown you a reason to get out yet, right? But everybody should trade their own way, right? Trade, do what you do, right? Now, this could be one of those things coming right now where it's like, boom, another green candle comes in, takes out this red candle, and that's actually proof that you should stay in the market. Then your stop loss goes right below this red candle right here, right? If this green candle takes out this red candle, from an Oliver Velez perspective, then your stop loss goes right below this red candle right here. What's up, Mimi? I see you on the Oliver Velez. Um, he 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 might have he might have talked about taking profit. He might have talked about taking profit. Not sure if you'd be out totally though, but yeah, I mean, um, he teaches multiple ways of handling it. You might be talking about the three pushes right here, right? But to me, this is two pushes because you would have gotten in on this one, right? So one push, two push, and you're waiting for the third push. This would be the third push right here. Oh, so you were talking about three pushes. Okay, yeah. So this wouldn't be your first push right here, right? This would be your entry, right? Power bar entry, one push, two push, pause. This would be your third push right here, right? So we actually still waiting on the third push. But that's my opinion though, right? And I could be wrong on that one. Maybe you got in down here and then you still have three, one, two, three, you know. So it all depends on where you got in. If you got in on this candle here, maybe because you said, hey, you know what? From what I can see, this looks like it's going to turn around, and you got in early. Then you should, in my opinion, you should be out of this trade because one push, two push, three push, bye bye, right? But you know, and he talks about how sometimes you're only going to get two pushes. So in that regard, these two might be it. And so you'd actually be watching right here to see if so, right? Um, Either way, I think we're still waiting on a third push. We'll see though, right? We will see. Um, let's see here. Let's go back to okay. Yep, I got it back open. All right, now let's get out of the smaller time frame here real quick. We'll come back to that, I guess, and we'll take another look at it in a little bit, Mimi. We'll take another look at it in a little bit. But good to see another Oliver Velez. You know, another Oliver Velez. Do I say student? Do I say proponent? Do I say let's go proponent? I see another proponent of Oliver Velez. You don't see a lot of people who you know who propose to look at the studies of Oliver Velez these days. People bougie now. They bougie now, Mimi. They bougie now. They act like they too good for Oliver Velez. You know what I'm saying? One of these days, I'm gonna walk. I'm gonna show you guys one of his videos. Ah, okay, 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 Mimi. For in the case of like how I came about really taking. He was the first person I heard. You know that what they were saying actually made sense. Nice, nice, Shay. Nice, 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 nice. You know? Yeah, he was the first person that I heard that actually made sense. Right? For those that don't know about him, here I'm gonna put this in the chat. His name is Oliver Velez, Velez, Oliver Velez. All right. Um. So yeah, like I got you. Yeah, I understood. I understood, Mimi. Yeah, but like he was the first person that I heard that actually made sense. Like basically, I already had a little bit of knowledge on the market. So as I listened from one person to the next, I'm like, yeah, that guy ain't making no sense. Yeah, that guy ain't making no sense. Then I got to Oliver Velez, and I'm like, okay, now this guy makes sense. You know, because much of what he's discussing speaks to valuations. Hey, you right about that. Say I do not quote many people. So that should definitely tell you that Oliver Velez is a one of one. He is a one of one. Um, you know, there's there's just not many people that we can say have actually been able to the things that they discuss are really as they discuss them, you know? So real quick, we gotta go back. Look, we hit our target. We hit our target. Right? 501. Boom. Now it'd have been for you to get out, right? All right, but now it'd been for you to get out. If you were going for the gap close, you're welcome. There you go, right? You got your gap close too. But this 501 was the original target when I started talking about the potential for that trade. But this is looking very good right now. So you're hitting the 50. It's looking very good right now in terms of something's probably happening. What I like about the way it teaches that you're able to show the why. Yeah, yes. The trade together. Um, thank you for that, Mimi. I appreciate that. Yes. Yeah, I've actually that's been something that I've really enjoyed knowing is that some of my students are saying, you know, I want to take the combination of what I'm learning here in the equity channel and what I'm learning from Oliver Velez. And I think that's really great because you're essentially saying, okay, here's this guy that's teaching here, and here's somebody he said he learned from, right? Why not? That's like learning from the Karate Kid, right? That's like learning from the Karate Kid and Mr. Miyagi at the same time. You know what I mean? That's like learning from the Karate Kid and Mr. Miyagi at the same time. I don't see anything that's negative in that regard. Look at this market, guys. Look at this market. Um, I need to get over to Clubhouse later, and we need to have a conversation with my guy Yakubu. All right. That would be a very interesting. He and I were talking. Some of you guys remember the. Some of you guys remember. Come on, buddy. What's that? No. Yeah, go ahead, grab it. One second, guys. Cecily, what are the dots about? What's going on in the market? What is that? What's that dot about? You gotta let me know. What's the dot? All right. Is it going to remain a mystery? um, but look at us hitting that point of control, hitting that point of control right there. All right. Um, finding ourselves some resistance around this area, right? Right around here, right? 51742. Right, 51742 is the high right now. Um, oh yeah, oh yeah, Aldrin. That's why we. So if you guys notice something, right? I want you guys to notice something. Notice, notice that, notice that we did not. I repeat, notice that we did not change the way we do things in any way, right? We kept operations as usual, right? You notice that? Okay, operations as usual. When you're already doing things right, you don't gotta go switching it up. All right, you don't gotta go switching it up when you're doing things. You're doing things the right way. Um, so I've got Bloomberg on right now. We're gonna see if they're discussing anything. All right, here we go. Breaking news.
6%. Remember, at one point in the cash trade, it was down 4.5%. So a really violent reversal that we're seeing right now. The Nasdaq 100 leading these gains.
Thank you, AC.
Currently up about 2.5%. I just want to note that volume off the charts once again. The S&P 500's volume is 140% higher than its 30-day average. So just amazing there. And Matt Miller brought up the bond market in the break, and I want to go there because the 10-year Treasury yield, we're knocking on the door of 420, I believe. This makes me feel more comfortable when we get to 420. There you go, for many reasons, I'm sure. But it's interesting that, of course, it was the bond market that led this move. The bond market has been selling off all of this morning. You haven't seen that Haven rush, and now the stock market is following. I just want to point out also, yesterday when we were in full on panic mode, and I know it wasn't disorderly.
No, not we, not we.
NYMEX crude under $60 a barrel, which is a real one for Texas. Yeah. It's a real problem for Oklahoma. It's a real problem for all of Trump's supporters in the Southwest. So to see crude climbing back up again, more than $1 to 63 right now is, I would say, helpful to his agenda. Yeah, there you have it. So we'll continue to track that reversal. But let's broaden out the conversation because prior to the last 10 minutes or so, the market sell-off really causing anxiety among retirees and everyone else. But specifically when it comes to retirees, according to Fed data, people 55 and older hold about 79% of equities in mutual funds among U.S. households. Let's discuss now with Ed Murphy. He is the CEO of Empower, which is the second largest retirement services provider.
Hey Shay, isn't this exactly what we were talking about last night? Those retirees. You see that? Now you see why this was such a big conversation last night. I know some of us weren't in there. Kenneth, I think you were in there, Kenneth, when I was talking to that guy about retirees and like his comments towards that, which were just crazy.
What message would you bring to the folks who actually are checking their 401ks and getting quite nervous here? Yeah, it's a message of reassurance and staying the course. If I look at the last week, Thursday and Friday, we saw a 30% increase in the call volume coming into our call centers. But what we found was, for the most part, people were just seeking account balance information, maybe looking for advice. But trading activity was pretty de minimis. We didn't see much in the way of trading activity. I think what's happened is investors have learned to deal with these gyrations in the market, and they understand that these investments are longer term investments. And the industry, I think the media has done a really good job of encouraging people to stay the course. And so that's what we're seeing right now. Yeah, for sure. If you have a longer term outlook, I'm not going to retire for probably 15 years. I still, because of the because of the ease of using our app, I'm still looking at it a lot when we have volatile days like this. Speaking of volatility, take a look at the indexes that were NASDAQ 100 up unbelievable, more than 4% right now. We have the S&P continuing to climb now, more than 3%. Do you see, again, because of how easy you've made it for people to interact with their 401ks, more activity? Like, are more people going in and saying, I want to change the balance, the mix of my portfolio, and actually doing it? Not so much the balance, Matt, or changing the balances or repositioning, restructuring the portfolio per se. What we see is high levels of engagement. So we track usage of the app, we track usage of the website. We have 19 million customers, so we're monitoring that activity all the time. I think people really understand the benefit of dollar cost averaging. Most of our savers are saving through payroll deduction. So every 2 weeks or every week, they're saving money in their retirement accounts. The one thing I would note, if you look at our wealth management business, we saw an increase of 200% in trading activity on Thursday and Friday. 75% of those trades were purchases. So the retail investor has not capitulated. The retail investor has stayed the course. And in some instances, I would suggest that they're leading this rebound right now. There's $7 trillion in money markets, the highest amount in the history that we've had in money market accounts. So I think there's a lot of cash on the sidelines that looking to take advantage of opportunities in the market. Just trying to think long term for a second here, for even longer, because there is so much volatility, and even with today's rise, as we're seeing at least for the moment, you are still seeing the S&P 500 wiping out roughly half of last year's gains. So yes, maybe Matt might retire 15 years from now, but what about the people who are retiring right now? What about the people who are living off that retirement income? How are they feeling? What are they doing? Well, I think that's definitely a challenge. What you find, though, particularly for retirement investors, most of them are in a diversified portfolio. So when you look at an index like the S&P down in bear market territory, typically those in retirement accounts are not suffering losses that are consistent with the S&P 500 because of the diversification. 70% of the assets are in target date funds, multi-asset class type funds. So you don't necessarily see the level of exposure. That being said, I think the concern that you raised is a real one. If you're in retirement or you're nearing retirement and you see this kind of a decline, it can be a bit concerning. And so, obviously we encourage people to have emergency savings account, to have at least 2 years of expenses set aside in the event that these types of situations occur. And if we hadn't seen this big meltdown that we've seen over the past week, we probably had led this interview with the conversation around putting private assets in 401ks. But I do want to talk about that because one of the benefits of private markets is that you don't have intraday prices unless, of course, you're in an ETF. But that volatility, that day-to-day volatility, you're kind of insulated from it, at least on a psychological level. So take us into that conversation because it's been floated as a real possibility under this new SEC that you could see privates work their way into the retirement system. I think we will. If you look at the markets, the structure of the markets have changed so much. We have 40% less publicly traded companies today than we had 20 years ago. You also have 87 to 90% of the companies in the United States with revenues over 100 million are private. So because we have this structural change, we have 125 million investors today that don't have access to the private markets inside the defined contribution context. And so Empower I've been pretty outspoken about this. I think it's the right thing to do longer term. We could do it in a way that's safe. We could do it in a way that's cost effective. If you think about it, it's...
All right. We've heard enough of that. So here's the deal, right? I want y'all to notice something. Notice how much deeper we went in the market, and we still did not hit a new low on that CCI. Y'all seeing that? Notice that, right? Let me just move this up here for a second, right? Notice that. Notice how much lower we went in the market, but we still did not hit a new low on that CCI. Look at it. Y'all seeing that? Okay. Major divergence. Major divergence. That showed a necessity for the decline, but it didn't necessarily show the willingness, you know? The other thing I want to point out is let's go over here, right? Look at this. Look at this. I mean, this is beautiful stuff right here. This is beautiful stuff right here. I mean, look at this. Okay, y'all seeing this? Seeing this right here? All right, look at this. Hey, Raxon, shout out for the follow. Hopefully I said that name correctly. Hopefully I said that name correctly. Hey, Raxon, shout out for the follow. We are now. All right, sorry about that. Hey, no, no. We are now one follower away from our goal of 50. All right, sorry about that, guys. These y'all well for those that are already used to being on the stream, y'all know what it is. My wife is walking in, so um you know uh so these dogs are going crazy. That's all it is. All right. Now so yeah, look at those bounces. Look at those rebounds, man. I had a bunch of orders locked in for the day when the market opened. So I caught a bunch of discounts this morning. I caught a bunch of discounts this morning. I just had like just orders just waiting. You know, this was just for the record. I had these orders waiting since Friday. I had these orders waiting since Friday. Literally. I I after the market on Friday, I continued to do the research that we were doing. Just researching the market, and you know, it was just you know, it was just so many discounts just so many discounts in the market, right? That there's just so many discounts in the market that I'm sorry, y'all. This dog is. I'm sorry. Uh, there's just so many discounts in the market that I continued to work, and then I just started to you know uh, just start to lock in those orders. So just imagine that I just had orders just limit orders sitting there since Friday. I didn't even check this morning to see if they if like what happened, because I know they were going to get filled. I was not aware that any of this was going to happen today, so we didn't know that this was going to happen. But one of the things I talked about, um, which sections are beneficial right now. So we have to. Okay, we have to understand one thing, right? We're dealing with a bear market at this point. So in that regard, pretty much everything, every sector that you might want to buy should have something there that's sufficiently cheap. Pausing on that. I'm pausing on that for a reason, right? I'm going to repeat what I just said. We're dealing with a bear market right now. So every sector you can think of should have something that's sufficiently cheap. The question is, what companies are you interested in? Are they good enough? Are they quality companies? And are they sufficiently cheap? Are they trading at a discount that you right that you think is worthwhile? I'll give you an example, right? Let's talk. We talked about this on Friday, but let's talk about it again. Let's talk about it again. Let's go. Let's go over here real quick. All right. Let's go here. Now remember, I built for you guys. I showed you guys how to build a discount model, right? We're gonna call this the class model. So we're gonna call this the class model. All right. This is the class model. This is what we built. We built this. Was that Friday? I think that was Friday, right? So I built this for you guys on Friday, right? Let me know if I'm wrong or right here. But I thought it was Friday. Okay. So here's what matters. Here's what matters. Saturday. Okay, I showed you guys how to build this on Saturday. Oh, even better. So you know. Um, let's see here. Now let's talk about this for a second here. Okay. Um, let's see. Go to Finviz. All right. So so I'm gonna post a video from Saturday back in the chat for those that weren't there. All right, in the Telegram. All right. So here's the deal. So here's what we have to do first. Right. There's a concept known as screen away weak names. Screen away weak names. Get all of the weak companies away from you first. If I just go to the market and I just start looking through everything, there's 10,050 symbols here. That's stocks and ETFs, right? So I got over 10,000 things I can buy here. Now, I'm going to show you guys a few little tricks that you can use, and we're going to talk about it, right? Today I'm going to show you guys another trick that I've never shown you before. Y'all ready for this? Hope you're paying attention. Let me get it. Hold on. Ah, You know, quick sip of the tea, real quick. Quick sip of the tea, real quick. All right, check me out. Index S&P 500. You want to automatically break the market down? Um, maybe you want nothing but S&P 500 companies. Boom, you're done. Here goes the 500 names right here. These are your 500 names right here. Then I can say, okay, now let's see. Maybe maybe I want the guys in maybe I'm interested in industrials. All right, I got 70 names right there. All right. That means right. I got four pages. I'm gonna take the quartile approach. I'm gonna say, okay, let me go over here to valuations. All right. Let me let's talk price to sales. Let's talk price to sales. Hold on. Let's price the book. Hold up. Let's talk price to sales. I'm gonna go highest to lowest. All right. So that means all these guys on page one. On these guys on page one, I'm gonna consider to be in the too high category. All these guys on page four, I'm gonna consider these guys to be cheap for a reason, meaning the market has some reason to have them priced all the way down here. Page three, I'm gonna look at this. This is value. These are my value names. Page two, these are gonna be my opportunity for growth. Okay, the market is gonna have these guys priced for growth. right? If I'm looking at it from that perspective, I can do price to earnings, forward PE, right? Same perspective. Okay, same perspective, right? Everything on this page too expensive. Page one, everything on page four. The market has a good reason for them to be this cheap, right? Page three, it's going to be my value. Page four, it's going to be my growth. Okay, that's what we would do. That is what we would do here, right? So these are simple ways, Thea, of screening the market, right? You want to screen the market and figure out ways to get to the names that you really want to look at. So that's one way there, right? Another way is I say, okay, you know what? Let's let's actually refresh this page real quick. Hold on. Matter of fact, hold on. Let's do this. Hold on. Let's just get out of industrials. Right. Matter of fact, hold on. Let's go out and come back. I want to get rid of the sorting. I want to get rid of the sorting, right? All right. So index. Let's go back to index. Let's go to SP 500. Let's say I want to do that. Let's say I want to do just SP 500 name, right? Then I say, okay, you know what? I only want profitable S&P 500 names. Let's say I do that. So I go to PE and I say profitable, right? Oh, okay. Well, 20 companies in the S&P 500 are not profitable. So all of a sudden, those guys are gone. See you, right? See how that works? All right, 20 companies in the S&P 500 were not profitable, so now they're gone. All right, let's keep going. Let's say I only want companies where insiders are actually buying right now. All right, yep, 37. There's only 37 companies in the entire S&P 500 where insiders are buying their own stock. That's pretty interesting, right? Let's get that one off of there, right? Right? There's only 37 profitable companies where insiders are buying their own stock. All right. Um, how about we say what are the stocks that institutions are buying right now? Right? That's 325 of them, so I can dial that down more, right? 325. Okay. Let's go with quick ratio over one. So they're sufficiently liquid, right? So these are your liquid names right here. Let's get that out of the way. So now we got 122 companies, but that's still 7 pages, right? I always want to bring it down to 4 or 5 pages. I always want to bring it down to 4 or 5 pages if I can do that. Earnings growth next 5 years. I'm gonna go out on a limb here, and let's say some of these companies may not have a positive projection for the next 5 years. Who knows, right? Positive. Right. A few of them went away. A few of them went away. Okay. Let's say over 5%. Okay. A few more went away. So that's 109 companies now. Right. We're still, we still want to dial it down one more. Let's get one more thing in here. Um, hmm. Let's go with a price earnings growth under 3. And there you go. We got 70 names. Right? We're gonna go right back, same perspective, right? Same perspective. Come back over here. So what we're looking at right now, let's go valuations. I meant to say forward PE. Okay. Okay. What we're looking at right now, are profitable companies in the S&P 500 whose earnings are projected to grow by more than 5%, whose earnings are projected to grow by more than 5%, price to earnings growth under 3, quick ratio over 1. So they're liquid and we're not overpaying for growth, and institutions are currently buying them. So Thea, that's how you do this, right? You wanna in a moment like right now, I'm less worried about the sector and I'm more worried about the health of the company. Okay? You know, so now I can look at these companies and say, okay, you know, let's where's my basket in the S&P? My basket is here, page 2 and 3. That's where my basket is right now. By the way, do you see Google? Look at Google. Google, Enphase, Freeport McMoran, um, right? Cognizant, International Paper, right? Regeneron, right? EPAM, Tapestry, eBay, PayPal, ConocoPhillips, right? Look at these names. Look at these names. These aren't slouches here. JB Hunt, right? Honeywell, Nvidia. Look at him. Look at Nvidia that found its way. Nvidia found its way into the growth at a reasonable price basket. Let that soak in. That'll tell you how much things have changed, right? Look at Fiserv. All right. Look at Lululemon, right? Right. Google's secondary shares. All right. All right, look at Emerson Electric. Right. Look at Allegiant. Right. But you guys get the point. You guys get the point. Now, nonetheless, all 70 of these companies, nonetheless, just for the record, all 70 of these companies meet a pretty good set of criteria. But I would look at these 2 pages first, right? And just to show you how to sort it out, you can also go here. So order by, forward price to earnings, and then hit right here and go descending. Okay? Just for the record. So if I want to go order by, price earnings growth, descending. All right, and then I get this right here. Okay? So here we go. Here we go right here. Okay? So now these are my new names here. My new names here. Look at Schlumberger working their way into the mix now. Is that ResMed? That's ResMed. All right. So that would be how it's done right there, guys. Okay. Just for anybody that wants to think about doing this. There's other ways to get it done as well, right? There's other ways to get it done as well, but this is your simplest way of getting it done. Um, I'm gonna let you guys pick a day. Let you guys pick a day when you wanna go over it. I'm gonna show you guys how to do the what do you call it? Uh the relative cape strategy. All right. I'm gonna show you guys how to do that. Okay, how to do the relative cape strategy. Relative PE, relative Schiller PE basically. All right. That's one of my favorites. And but like I said, in times like this, it's going to be real difficult to find things. Now here's the secondary part of that. This is your discount model, right? Matter of fact, hold on. Let's go back over here. Let's reopen this closed tab real quick. Let's go back over here real quick. Here's the secondary part to that. Let's just take Nvidia for example. Let's take Nvidia for example. All right. We open Nvidia. Open Nvidia. Right here is your price target. Here's your target price, right? This is your average analyst target. See that? This is your average analyst target. Your low target is 120. Your high target is 235. Your average target is 173. Okay? Your average target is 173. Right? Earnings forecasts are still looking decent. Right? All is all. Okay? So we're gonna take this 173, our average target here, 173. Go back to our data right here. Where's it at? Stock detail. So, but I like to go here because your beta is right here. So 173.16 and your beta. You want these, you want the target price and your beta. You want the target price and your beta. You say 173.16 and your beta of 2.08. You come over here, you plug those in, right? 173.16, beta 2.08, and this automatically calculates for you. It says that you want to buy Nvidia below, below $132 a share. That's what it's telling you. Okay, and guess what? That is a 31%. No, I'm sorry. Wait, let me go back over. Let's see here. Oh, you know what? Hold up. No, it's not. It's not gonna do it. No. Right. So yeah. So that turns this 15% discount into a 31% discount, basically. So this is a 31% discount of the average analyst target. So we take the beta. So this is a beta adjusted target. So it's a 31%, right? So when we look at Nvidia right now, right? At what point did they first break below that 130s area? It was right. It was right. It was right around here, right? So you can see all this up here where people were probably buying, right? Nvidia. You avoided most of that, and then so you always wait for it to drop down below the target. And like I always tell people, if it's below the target and oversold, even better. Right? If it's below the target and oversold, then even better. Because you can actually have you can actually be 30 on the 30 on the RSI and still be above your price target, right? And then so it's going to be up to you to decide what you want to do. All right, let's get back to the markets because I see we've had a pushback lower. All right, we've had a pushback lower for a moment here. Let's see if this is going to continue or not. Right, but I want to point this out right here though. Good question. Good question, Thea. Good question. Good question. All right. So I want to point this out right here, right? So this is when we talk about confluence. This is your confluence right here, right? Key level from what we studied on Saturday. Key level, um, as it pertains to the range of the value area high and value area low, and our 50-day moving average. Oh, well, not 50-day, but 50 MA, right? Um, and our 50 MA. So look at that. Look at that right there. That confluence. That was amazing. That was amazing. But nonetheless, we said when we got about 521 was our target, right? We said 521 was our target. We got that, and we can get out, we could have gotten out of the way, and we wouldn't have suffered this downside here, which is pretty interesting because we said on Friday, so this is going to be one of the strongest points of resistance we hit this week, right? Well, that seems pretty strong to me. That seems pretty strong to me. All right. Um, so we'll see if we end up retracing back to this area or not. But for now, you could have had your nice beautiful trade and gotten out of the way. Right? We were actually saying, yeah, there you go, you can get out now. Right? As it was happening. Right? So no excuses there, right? Okay. Now the craziest thing is if you were trading from the 5 minute chart, you should have certainly been out of there. From the 15 minute chart, um, what's really interesting here is we actually never broke the lows of this 15-minute candle right here, nor you know what I mean. So if somebody had all the guts in the world, I mean all the guts in the world, they might actually still be in this trade from a 15-minute perspective. What do y'all think about that? What do y'all think about that? Like, talk to me. If somebody had all the guts in the world, they might still be in this trade right now because they actually never broke the lows of this 15-minute candle right here. Any thoughts on that one? Who thinks they would have had the guts to still be in there? Anyone? Where you at? Where you at? Where you at? Where you at? Where the guts? Where the guts? Who thinks that they would have the guts? Kenny said he out on the 5 minute. Trade by your rules, Cecily says. So Cecily, that means you would have still been in there, right? Yes, no, maybe so, maybe so. I don't know. You gotta tell me. I don't know. Yes, okay, you would have still been in there, right? Because the rule says you never broke the low of this 15-minute candle, right? That's the rule, right? Um, and so that's the craziest thing. So like when you um, and that's what I said. Like some of the things that he used to say is it makes so much sense, right? And I'm tell you something. The teachings of Oliver Velez work out far more than the teachings of anybody that I know, anybody that I've ever looked at. Right? I've seen some of the other models, right? And the Oliver Velez school of thought is giving 70 to 80%. You know, and I'm sorry, to all the other. We're not gonna mention the name of the other schools, Cecily. We're gonna leave that alone, right? We're gonna leave that one alone. We ain't gonna mention the other schools by name. We're gonna leave that part alone. But let's just say, I've seen the win ratios, and they're not close to the Oliver Velez school. They're just not. Okay. And the Nasdaq is back in the green, by the way. They're up about a 0.5% right now. SPY is closing in on it. IWM is they're working. They're working. They're trying to get there. They're trying to get there. Look at how low the VIX went on that move. Look at how low the VIX went on that move, guys. All right. I was telling somebody this the other day. I said, listen, yeah, I'm gonna walk away. I walked away. I walked away. I moved away from it. I moved away from it. Oh, they're quoting one of the guys I know from Wall Street right now. Wall Street thought Trump was one of them. Wrong. Oh, that's crazy. Okay, way to go, my guy. He said Wall Street thought Trump was one of them. He said wrong. Um, way to go, Chris. Way to go, Chris. Shout out to you, man. Uh, I'm gonna send him a message later. I actually know that guy. Anyways, um, so so check this out, right? Check this out. I was talking to somebody recently, and I said, listen, when 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 the VIX drops, it drops precipitously. There is no, um, there's no moment to blink and think. It's just not there. And so you gotta really understand, uh, you know, standard deviations, those types of things. By the way, so since it went to, we're gonna have to add another one right here. Let's just add this real quick. Oh, you know what? I forgot to do the calculations. We're gonna have to do that real quick. Hold on, let me bring this. Oh, I don't have to do that. Let's just go here. All right. So what's that gonna be? 51. All right. So All right. Square root of 12 is what, man? Look, somebody's listening to the stream for the first time. Like, did this guy just say the square root of 12? It's a way to tell what the VIX is suggesting to us, right? That's all it is. So the VIX at 43. Let's talk about it. The VIX at 43. The 43 divided by 3.464. That's telling us the market's going to move about 12.4%. Right? So here, let me 12.4%. Oh, wait, hold on. That's the wrong one. Let's go here. 12.4%. Okay, there we go. Look at that gap down on the VIX right there. Y'all see that? Look at that gap down on the VIX. Got him. As I said, hold up. What did I do here? As I said, the VIX there ain't no warnings, you know? The VIX does what it does. It does what it does. 12.4. All right. And then we have 51. 14.7% right here. 14.7%. So when the VIX hit 51, let me just explain to this what this means for those that are just joining us for the first time. Right? When the VIX hit 51, that was the same as saying the market had about a 15% move up or down priced in. Had a 15% move up or down priced in over the next 21 days, or you can say 15% volatility priced in. So that could be, market spikes 7%, you know what I mean, drops 7%. It could be the market drops 5%, rallies 10%. It could be, you see, so 15% up or down just means what's the level of volatility over the next 21 days. Okay. And which, by the way, so think about it, right? Were we not down? I think we were down 5% in the pre-market, right? Y'all, somebody help me out on that. Remind me. Just so that I'm clear, we were down about 5% in the pre-market, right? So that kind of aligns with what I was just saying, right? Just so that I'm clear, y'all let me know. We were down 5% in the pre-market, right? Yeah. Right. So right. Okay. So basically, that kind of aligns with what I just said, right? And if you think about what's happening right now, it's most certainly aligns, right? So basically, like I said, it could be like the market was down 5% and then rallied 10%. If you talk about being at around 51, right, on the VIX, okay. So we were down 5%, and then all of a sudden here comes this announcement, right? We're pricing in the probabilities and the likelihood of all this continued volatility. Okay. So if the market rallied 10% off of the lows, I'm going to calculate that for you guys, by the way. Let's calculate it. Right? Calm down. My dog hates clapping. Don't ask me why. She's like, no round of applause in the house. No round of applause in the house. I know. My dog's like, no round of applause, okay? We don't do round of applause around here. That's my dog. She just hates clapping. She's like, no round of applause for anybody. You know what I'm saying? If you sing happy birthday in this house, you better not clap while you're doing it, okay? She put your face in the cake. She put your face in the cake. Plain and simple. All right. Let's do what happens if we're at 59. All right. What does the VIX at 59 suggest? VIX is 59. Oh Lord. 17%. 17%. 17%. 17. Yep. It's about 17% flat. 17.03 is what it is. All right. So this would be 5 standard deviations right here. All right. These are unsustainable. So these are most certainly um gray swans and uh and other anomalous activities, right? That's what we have here. Gray swans and other anomalous activities. Yo, y'all not gonna believe what I just read. They said we're putting tariffs on monkeys used in COVID research. I'm not joking. That's what I just read. That's what I just read. We're putting tariffs on monkeys used in COVID research. I swear. I mean, can't make that stuff up. You can't make it up. Okay? You cannot make it up. Oh, by the way, you'll notice that the Nightbot just posted the Stream Elements leaderboard in the chat. If you want to know where you fall on that leaderboard, go ahead and click on that link. The last I checked, my guy AC Prudent, was numero uno, the head honcho. Let him know, AC. Let him know. Let them know. I gotta come up. Um, and so we're so next quarter I'm gonna come up with a I'm gonna have to think about how we deal with the leaderboard, right? Um, yeah, I'm gonna have to think about how we. So I want to know how they do it because it says current and then it says all time, right? So I'm gonna have to see how they how they really come to those numbers and stuff like that. Like does current mean does current mean 1 month? Does it mean 1 week? What does it mean? But anyways, as you can see here, um, you can see here the the VIX is starting to take this turn downward. So as the VIX falls, it's pricing in less and less and less volatility over the next 21 days. Okay, so keep that in mind. Um, okay, so they're talking about the Mag 7 sales revenue. Um, so it looks like out of the Mag 7, Amazon gets most of their sales here in the U.S. More than any other in the Mag 7. Apple target cut at Wedbush. Apple, oh, they cut the target to $250. That's a huge cut. Check this out. VIX whipsaws while futures signal volatility to stay high. VIX whipsaws. Right? Yeah, you got whipsawed all right. Don't play with the VIX, man. Okay? We keep trying to tell these folks, don't play with the VIX. It's nothing to play with. All right? Look at this. Look at this real quick. Take a look. Just take a look. Right? Look at this. Look at the thinning volume as you went like the volume is thinned out. We was talking about this last night. We were talking about this last night, right? Look at how thin that volume got. The more you fell, right? Well, last night and the day before. LeBron James and Diageo are coming to an agreement, guys. For those that are in that DEO position, LeBron James and Diageo are coming to an agreement um, on Ciroc vodka and tequila. Alrighty then, we'll see how that ends up panning out. Yeah, no, yeah, no. For the DEO folks out there, for the DEO folks out there. Oh man. All right. So let's get to this request that we had earlier this morning. All right. I'm gonna actually get rid of these levels for now. So it was requested this morning to go over how we basically came up with those levels that we were that we had on our chart here. So we're gonna let's go with the QQQ here. Okay. All right. Boom. Da-da. Hmm. Interesting. All right. I could have swore I added my pro pivot indicator. All right. Let's pop it in there. All right. Let's go to the QQQ. All right. We need to add a day here. It looks like. Hmm. Double check that. All right. Fantastic. All right. 1 second, guys. All right, guys. So let's talk about this here. All right. All right. All right. All right. So first things first. The first thing you need to do. The first thing you need to do. And let's talk about this really quickly here, right? Let's talk about this really quickly. Let me go back here first. Let's go back here first. Okay. Look at our two key levels. We picked these levels over the weekend. Level one, level two, level three, right up here, 559, right? These purple levels, 484, 521, 559. We said these were going to be the most important levels this week, as far as what we can see, as far as for what we can see. Okay. Now we I think we did have a level lower. Then we did have a level lower than 484, but we didn't end up putting it on our chart. Either way, the point being, look at what happened this morning. Boom, hit this level right here. Rallied up after Trump made whatever announcement or whatever happened, right? Um, Rallied up and hit 521 and then bow, right? Right back down to. I would call this equilibrium, by the way, between these two levels. That's about equilibrium, right? So fell back to more of an equilibrium price between the two. Let that soak in. All right. So it was requested this morning. Um, huh. Chinese buyers snapped up copper as prices plunged below $8,500. Hey, let it lay. It is what it is, right? It is what it is. It is what it is. Um, we got our copper. We got our copper. You said it was fake news, you think? I'm not sure. Um, I'm not sure. I haven't seen it. I haven't seen it. I haven't seen it yet. That's why I said whatever announcement he made. You know what I mean? I know I seen something of him speaking with somebody. But either way, no matter what though, right? Notice, even if let's say it was fake news. Notice what that fake news did from one level to the next. What do I always tell you guys, right? We work from one level to the next. That's what we do. Okay? Let's now let's talk Nasdaq. Let's talk QQQ. All right, I'm actually going to bring this back real quick. Let's bring these back. All right. So here's what we were talking about. All right. So when it comes down to it, let's bring this up here. We're looking at all of our levels here, right? Look at all of our levels here, right? Monthly pivots, um, our likely trading range, right? Weekly pivots, standard deviations, right? So, okay, Anisha. By the way, I was wondering if you were there, Anisha, because I know you were the one that made the request, right? So happy you're there. You can see what we're talking about right now. Okay, so um, what we want to do, right? Look at where we are in the market. We're at 424.59. Oh, you talking about no. We don't do EPS forecasts for net for no, you don't no. You don't do that for those. No, nobody actually tracks the earnings for the for the QQQ for the Nasdaq and the Russell. If they did, then I would, then I'd be able to do it, you know. But I've never actually seen anybody giving their earnings numbers. Let's see if we can find them. Let's see if we can find them. If we can find them, then I'll do it. Okay, if we can find them. Let's see if we can find them real quick. I'll look for it real quick for you. Let's see. EPS projections for Nasdaq 100. Okay, I see some earnings per share charts right here. Do we have a projection though? That's the question. That's the question. Do we have a projection? Hmm. I don't see any projections. Okay. On March 31st. Reached a record high of 653. Okay, so no projections here, right? So what we need are projections. Ah, got you. By the way, yo, Anisha, peep this. I go to my chart this morning. Go to my chart this morning, and my projections are gone. They're like literally. Oh no, they're back. Oh, I don't know what happened this morning, but I swear they were gone. Whew, they're back. Okay. I was like, yo, where are they? But all my projections were gone this morning when I went to the chart. I was like, yo, that's crazy. This right here was empty. No, I didn't. See, they're there now. I didn't hide them. No, but the two groups were gone. The group one, and group two, and group three was gone. They were gone. Like the whole group was gone. I was like, yo, that's crazy. Why? I'm like, why are they doing this to me? um, I didn't. If you notice, You lost your MAs? Oh, so TradingView was wilding out this morning. Okay. Um, so like if you guys you didn't even see me react to it, but it happened right here live on stream. It happened right here live on stream. I just didn't react to it. I went over here, I looked, and they weren't there. I just sighed and walked away. Cause I'm just like, oh wow, like because I know I can always recalculate them if I wanted to. So that's the thing about it. Okay. By the way, I want to point this out, Anisha. How I usually get the projected earnings for the S&P. Here's how I usually get it. FactSet usually publishes the forward PE of the S&P, and I usually take the date that they publish it and divide it by the price that existed on that day. Does that make sense? That's what I usually do. And that's how I get the projected earnings for next year. So it's one of those things. Oh wow, look at this. Right? Boom, look where the rally took us here. Right to the next buy target. Come on, y'all. Took us right to the next buy target. I didn't even notice that. Well, I didn't notice it because, well, how could I, right? It took my level. Yo, Cecily, guess what I'm reading right now? They said the freight recession isn't going anywhere. The logistics industry will be one of the first to feel the impact of the US's new protectionist policies. Wow. Wow. They said the freight recession isn't going anywhere. All right, but so yeah, I thought you were requesting to do those other levels, but let's keep looking though. Let's keep seeing if we can find some earnings projections. So forward 12 months EPS. Let's see. Hmm. Okay. This says 821. This says 821. It seems a bit high. Seems a bit high, but hey. So by Friday, March 28th, 2025. Seems a bit high, but let's do it, right? Let's dial into the numbers. All right. So I'm gonna do this on my live on-screen calculator for you guys. I'm gonna use my live on-screen calculator for you guys. But give me 2 seconds here. Let me see here. So mm, so cost of equity. So the cost of equity is gonna be different for the Nasdaq, right? So let me just give me 1 second here. Let me do that calculation first. Un momento, por favor. So for those that want to know, here's the formula for the equity risk premium. All right. Let's duplicate this page right here. Let's duplicate. All right. So for the cost of equity, I meant to say, not the equity risk premium. All right. Formula for the cost of equity. All right. The formula would be. Let me delete this and this. This would be the formula right here. It would be the beta times the sorry, I'm sorry. Let me rephrase that. The risk-free rate plus the beta times the equity risk premium. All right. So So for the uh, for the S&P, because the beta is always one, right? Because the beta is always one, what you would usually do is say the equity risk premium plus the risk-free rate. Now, what do I like to do? I like to I like to take what I call the right. Let me let's do this real quick. I go based off of something that now I created this when I created this when I was studying economics, right? And I created this during that time, and it's called mm, the economic retracement theory. Right? The economic retracement theory, right? So basically, what I like to do is I like to actually um, I like to take the average the average risk-free rate, and I like to use that as opposed to the current risk-free rate. All right. So what we're gonna do is we're gonna go to let's go to multiple. Okay. Let's go 10-year treasury. The average is 4.5, so I usually use 4.5. So you got that. Then you say what's the average equity risk premium, right? Historically around 5 to 8%. In reality, the average market risk premium in the United States, right, decreased slightly to 5.5% in 2023. Uh, you know, these are that's a more accurate number, around 5.5%. So your your equity risk premium for the S&P, right? Your equity risk premium for the S&P would be, so here's your historical range right here. The equity risk premium in the United States range from 4% to 6%. You can take that into account as well. So if you said for 4% to 6%, you could actually say, okay, you know what? I'm going to take the low end of the range at 4%, um, the the high end of the range at 6%, or I'm going to take the average, which is around 5%. All right. I usually choose to take the average at around 5%. Okay, that's what I usually do. So so that would be 5% plus your 4.5. Right, your 4.5 for your right here, right, for your what do you call it? For your average 10-year treasury, your average risk-free rate. All right, that's what I would usually do. All right. Now, if you wanted to be, or like, let's say, I want to focus more on the range of my investment, you would go 3.75%, just about, because that's the 5-year average, 5 years treasury, which means it's a 5-year outlook, right? And that's actually, so we're gonna use this one today. We're gonna use the 3.75, right? So that's gonna be, so for the S&P that would have been 8.75%. Right, for the S&P that would have been 8.75%. Let me actually lock this in here. Let's go ahead and lock this in here. Right? Now for the NASDAQ, we gotta go with the FinViz real quick. Let's get the beta. All right, let's hit the beta for the QQQ. All right. So our beta is a 1.17. Our beta is a 1.17. So what do? Let's go back to our formula. So our risk-free rate, we're gonna put it at 3.75. Okay. Beta 1.17. Equity risk premium 5%. All right. So you say 1.17 times 5. We got to do that first. Then plus 3.75. Okay. Calculator. 1.17 times 5. That's 5.85 plus 3.75. 9.6%. 9.6%. So here's what we do. First thing we do, we take this $821 and divide it by 9.6%. Okay? So 821 divided by 9.6% or 0.096. All right. Hey, let's try this real quick. Hold on. Divide by um 0.096. 8,000 8,557. 8,557. Okay? Now, just for the record, this is what we call our no growth value. Okay? So let's go back. Let's go back over here. Let's go to our. We're gonna call this our little chalkboard, right? 8,557. Let's write that down. 8,557. Well, 71. We're gonna take that 71 points too, right? All right. Let's close that. All right. So this equals, what was it? 9.6%, right? Equals 9.6%. Hey, just for the record, man. Like, just for the record, I went to school to learn this. Okay. So for those those that are a little bored in the those that are a little bored in the stream right now, uh, hey, you know what? This is what you know, this is what a few college classes will do for you. You know what I'm saying? I went to school to learn this. All right. So we got 9.6%, right? So what we do with this is we say, okay, so this is our cost of equity. Okay. Then we need our, hold up, let's move this up here. Move this up here. All right. So we calculate our cost of equity, right? Then the next thing we do, we calculate no growth. I'll explain that in a few seconds. Let's do this first. All right. Calculate no growth. Formula for no growth says, um, it's a simple formula: EPS over R. You guys should remember that one if you've been in my class. It's EPS over R. That's your simple formula, right? Equals no growth value. Okay, that equals no growth value. All right. Now I'm gonna show you guys a simpler approach to getting the no growth value, but let me tell you something. I go this route every time because it's more reliable. But I'm gonna show you guys another trick, by the way. Y'all want to learn another trick after this? I'm gonna teach y'all another trick. All right, watch this. All right, so we then have what was the $821.54. Sorry about that. All right, here we go. 821.54. Hold up. 821.54 divided by, right? Divided by 9.6% equals 8,557.71. So this is what the Nasdaq would be worth. Listen to me very carefully. This is what the Nasdaq would be worth if if we did not um if we did not factor in any growth at all. If we didn't factor in any growth at all, the Nasdaq would be worth about $8,557.71. Okay. 1 second, guys. All right. Now what next? Okay. Let's talk about historical context, right? So from a historical perspective, when we look at the S&P 500, not the Nasdaq, but when we look at the S&P 500, you typically would have about 63%, right, of the price representing the growth that representing the work that we've already done in the market. Meaning, um, we've already we've already done 63% of the work we're paying for, right? Or well, I'm sorry, the SP 500, the companies in the SP 500 has already done 63% of the work that we're paying for, basically, right? And we're usually paying for that extra, what's that? 37% is for growth that we expect in the future. That's how it works for the S&P. Now, what I'm gonna do is I'm gonna actually beta, right? I'm gonna actually beta adjust this here, right? So that's all we're gonna do. We're gonna use this like this, right? So I'm gonna discount this because we're gonna say this. We're gonna keep it simple. The Nasdaq, we would usually pay for more growth out of the Nasdaq, right? So what I'm gonna do, we're gonna take that 63%, and remember the beta of the Nasdaq was 1.73, 1.17. I'm gonna say divided by 1.17, and we get, oh Lord, clear that, 63 divided by 1.17. I just typed it in this time. They're not gonna do me. They're not gonna do me like that twice. 54%. Okay. So we're gonna say that a good value would be about 54%, and that's gonna be our like base target. Okay. So we're gonna set that like in the middle there. We're gonna set that in the middle there. We'll talk about these other targets in a second, right? So let's go back to our right over here. So what we do is we take this right here. So um oh by the way, you see the Nasdaq right now? Let me go over here. Let's go to the Nasdaq right now. Actually, let's go to the Nasdaq. It's trading at 17,235.75, right? So what you would do is you would say 17,235 35.75 divided by, I'm sorry, not divided by, minus, I meant to say minus, really? Minus 8,557.71. And this is how much of the NASDAQ we're paying for growth right now. This is how much we're paying for growth right now. Okay? $8,678. So that's how much of this price right here is what we're paying for growth right now. We could, so two things we could do. We could divide that by the current, price of the Nasdaq, and we could, all that stuff. But the point being, that's how you figure out what the PVGO is, the present value of growth opportunities. All right, but skipping straight to the end goal here, how much should we be paying for this thing? Right. So formula for we'll call it present value. The formula for present value. All right. So what do we do? We take this and we divide it by 54%. And that's going to give us our present value for the Nasdaq. Let's see what we get. Let's do the math. So 8,557.71. Do the math. Close this real quick. So 8,557.71 divided by 0.54, 54%. 15,847. 15,847. That is what I would look at as let's go over here real quick. Let's get rid of these levels right here. I can always put these back. I'm gonna get rid of all of this right now. All of it. Get rid of all of it. Let's go to the S&P real quick. There we go. S&P. Grab this group right here. Okay. Let's back to the NASDAQ. All right. Voila. Put that there. Let's go ahead and boom. All right. Now let's start mapping this out real quick here. Let's start mapping this out. All right. So that would clearly be our lower worst case scenario, right? Let's where's that at? 15,847. 15,847. 15,847. Okay. So you have that. Now, where do you get these other targets from? Where do you get this from? Where do you get this from? Where do you get all this stuff from, right? So I showed you guys a sheet not that long ago, right? And let me see if I can pull it up real quick. Give me 1 second. 1 second. Alrighty. Give me a second. I'm just grabbing this for you guys real quick. Mm. Oh, there it is. There it is. All right. Let's send it over there first. I'll download this and bring it over to where we are. All right. Download. Download. Go back over here real quick. Let's go to a new page. Really? Alrighty. Alright. 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 Okay. So you can clearly see how around that 60% range, right? So this is your implied growth of earnings for the S&P. No matter what price we buy at, we're implying a certain amount of growth. Okay? Um Look, do we want to get fancy? Let's get fancy and make it a little piece of paper. All right. So no matter no matter what price we buy it, we're implying a certain amount of growth. So you can see right here, when we said the no growth representing about 63%, that puts us at a little over 11% growth in earnings for the S&P 500. See that? Puts it at over just a little over 11%, right? Or well, I'm sorry, no, I think it puts us closer to 10%. I meant to say earnings growth there, right? Or about 1.67 times, right? About 1.67 times the you know how do I put it? About 1.67 times the no growth value, right? Now, okay, so look at all these different growth rates. So what's the average growth rate of the Nasdaq? That's a good question, right? What's the average growth rate of the earnings for the Nasdaq? Um, is yeah, what is it? I mean, like approximately. So the Nasdaq 100 has shown a compound annual growth rate of approximately 20% in earnings and 12% in revenues since 2003. So the average earnings growth rate they're saying is about 20%. We're going to use that. We're going to use that right here. So that means we should. So 2.5. 2.5 would be our right. Would be our our upper target there, right? So what we would say, let's go, let's do this. So 8,557, right, times 2.5 equals 21,394. Okay, now for the record, let's go back to this chart here. This gives us our high target. This gives us our high target. Oh, look at that. Look at that. That was actually pretty close already, right? 21,394. 21,394. Okay? That would be our high target now. Look at that. Look at this. Look at it. Look at it. You can't make this stuff up. You cannot make this stuff up. All right. By the way, we don't need this target right here because that's you know, that's beyond the scope. We don't have a Yardeni target. And so this becomes our so when I say next big buy target, I put that there because we were talking about it that day. But this would essentially be our, let's say, intrinsic value, let's say. Okay. Which would in this particular case be the average between this and this. So let's do that math. So we have 21,394 plus 15,847. Okay, let's go back over here. Plus 15,847 equals, divide that by 2. And what do we get? Oh, Lord, not plus. Equals, I meant to say. 18,620. 18,620. We'll call it 621. All right? 18,621. So, what we would have been saying is this would have been our first buy target here. So we call it a buy target because that's what it is. Like that's where we plan on buying, or at least starting to buy when the market breaks below this, right? So big buy target or big buying opportunity is what we usually would call it, right? That was our big buying opportunity right there. So Anisha, there you have it. Right? Done and done. All we need are earnings and we're good to go. So you know, if we're trading below this level here, that's where we expect to see big buying opportunities. Okay? Yeah, let's make that actually a plural. Big buying opportunities. Right? Below this level right here. 18,621. And there you have it, guys. There you have it. All right. We'll I'm gonna have a session on Clubhouse. I'm gonna have a session on Clubhouse a little later. I'm gonna have a session on Clubhouse a little later um to discuss the things that we talked about today. So if anybody has questions or anything like that, you know, it'll be a great time to tap in then. I'm gonna do that around Power Hour. It's Monday, so I'm gonna do that around Power Hour. All right. All right. But for now, it seems like we're still holding off of these lows, right? We're still holding off of these lows, right? Oh, well, I'm sorry. I'm sorry. I should have did a recap. So a recap here. Let's do a recap first, right? Like good. So let's do a recap here first. First, you need to find the earnings. First, you need to find the earnings. Oh, oh yeah. Let's close it instead of opening it, right? Why not? First, you need to find the earnings. Um, and you can do this for stocks too, by the way, guys. The same formula I just did for the Nasdaq, you can do this for stocks too. All right. So first, you need to find the earnings, projected earnings, by the way, not current earnings, but projected earnings. Right. What are the earnings expected to be next year, right, or over the next 12 months? That's the first thing. All right. Next, you need to find the cost of equity. Right. The cost of equity would be the um, the risk-free rate. In this particular case, instead of doing the risk-free rate, we went to 5-year Treasury because we're doing a 5-year outlook, right? Look right here. See right here? Implied 5-year compound annual growth rate. And that is exactly why we used the 5-year average, the average 5-year today, right? Because we're doing a 5-year outlook. Just for the record, guys. I just wanted to point that out so that we were clear on that. All right. So you take the risk-free rate plus the beta times the equity risk premium, which is about 5% on average over the long term, right? Between 4 to 6%, right? So I repeat, that is the beta. I'm sorry, the risk-free rate plus the beta times the equity risk premium, right? And that is your formula for the cost of for the cost of equity. All right, that's your formula for the cost of equity. Now, here's the deal. Okay, um, your S&P 500 always has a beta of 1. We'll keep that in mind, right? Companies that have lower betas always have lower equity, always have lower cost of equity, right? You can always find your beta on FinViz right here. Find on FinViz right here. Okay, we'll keep that in mind, right? From there, you take that earnings that you found, the 12-month forward earnings, and divide that by the cost of equity that you found. In this particular case, it was 9.6%. That gives you your no growth value. It gives you your no growth value. All right. Um, and I believe this ended up being like 16,000 something. I put it over there on the chart. But either way, then you take your no growth value for the Nasdaq. You have a 54% allocation towards no growth. For the S&P, you would have a 63% allocation towards no growth. Okay, and in that regard, you you know, in that regard, you're able to calculate that way. You could also do a 60% if you want to do 60% flat. I've done it from time to time. You know, that extra 0.7% on the growth scale there. Um, well, I choose not to use the word dumb to describe anything that anybody's doing, except for Donald Trump. That's dumb. Uh, and in that regard, based on everything that's happening this year, leverage right now is something that uh, leverage right now is something that I would be advising against at the moment. So, that's going to be my answer there. All right. You know, if there are more losses to be had, why 10x your losses? All right. If they're, so yeah, I wouldn't advise somebody start using leverage. Now, we actually talked about this, Danny. We talked about this early in the year when we were at still at the highs, utilizing something known as the January barometer, and that January barometer was very spot on in everything that's going on right now to let us know to be cautious and to stay away from leverage for now because there was going to be a lot of uncertainty in the market. And what do you know? Voila, here's the uncertainty. I'm going to stick to that. I'm going to stick to that until, um, you know, until something is otherwise pointed out to me. Okay. Um, so hopefully that helps you out. I'm not recommending anybody use leverage right now. Oh, not a problem. Not a problem, Danny. Not a problem, man. Not a problem at all. All right. Let's see here. Now, let's oh, and by the way, when I'm talking about leverage, obviously we're talking about the 10x leverage factors and stuff like that. You know what I mean? Um, obviously, if somebody wants to trade options, they can still trade options, but that's a different type of leverage in that regard. But yeah, I would stay away from leveraged funds right now and stuff like that, and until things settle down. In which case, um, I'm actually looking towards next year. Um, before if anybody asks me anything about leverage right now, they're gonna get the same answer until next year. Okay, so just for the record, just in case one of you out there was thinking about asking me this question next month. You're gonna get the same answer until for the rest of the year. All right. We are off of leverage until we're off of leverage until until 2026, man. All the 10x leverages, right? So yeah, so that was our recap there. So you guys see how you can calculate that and get that done. All right. All right. Now in the meantime, it appears that we are still trying to just edge, right? We're trying to just edge our way back to some gains here, you know. Just trying to edge our way back in. And so it's pretty interesting, just to see how some of this stuff is looking. But what's more interesting is just, I mean, wow. What's more interesting is right here, right here, right? And that's just crazy, man. That is just crazy. Just wow. Look at that, guys. How beautiful is that? Absolute beauty. All right. Now, which time frame was that? So that was on the 15 minute where we hit the 50-day average there, or 50 MA, I meant to say. All right, on the 15 minute. On the 30 minute, as you can see, we've still got a journey to go if we want to get to the 50 MA. All right, still got a journey to go. Let me just auto fit this back, right? Still got a journey ahead of us. If we want to get to the 50 MA here, takes us to about 538. Right now, if oh, if what we were discussing earlier, if what we thought we heard earlier was fake news, then that would mean that this rally is more based off of the things that we've already discussed, right? Like for example, a strong support here. You know, uh, the VIX being in territories that are unsustainable, stuff like that. That's what that would mean to me. Now, this is absolutely crazy. Look at this, guys. Wowzers. Wowzers. That's crazy right there. I mean, dear Lord. So there's been some major sell-offs in the high yields area, right? Been some major sell-offs in the high yield area, which is pretty interesting. I was mentioning that this morning, that these guys were talking, buy buy like buy junk bonds. That's what they kept saying, right? Um, yeah, okay. Let's buy junk bonds, shall we? Alrighty then. First of all, right? This entire lack of optimism that we've been seeing, regardless, anyway. So these are your spreads widening right here, right? You can see, right? This has been going to the upside here, right? It's been going to the upside here, going in this direction. So this is where you're getting the widening of the spreads happening here, right? So TNX, that's our 10-year treasury, right? You can see again heading to the upside this morning. A little bit. These are yields. This is a yield right here. So see this drop right here? This says the price. This says the price was actually, you know, was actually rising over this time period, right? So the price of 10-year treasuries was rising over this period. Anyways, we'll see. We'll see what ends up happening here. Um, whatever the market has for us, we'll take it. All right. Now, for those that are, for those that are going to be joining us later on Clubhouse, I'll see you guys over there. For those that are joining us for the first time today, be sure that you hit that follow button, hit that green heart on your screen if you're watching on your phone, and that'll give you a dynamic follow. Make sure you turn on your notifications, and you know, uh, look out for us in the early mornings. We'll do the early morning rundown. Um, Other than that, guys, I'm gonna go get prepared. I got a call coming up, so I'm gonna get prepared for that, and we'll talk later. All right. Again, I'll be on Clubhouse uh later on this afternoon. Let's call it around 3 p.m. or so. All right. Somewhere after that point in time. All right. Hopefully everybody learned something today. Everybody be blessed. Stay well, and we'll talk soon.